I think it's pretty clear that Circle is like the Wall Street / Washington / banking dynasty goblin approved CBDC company that the US is going to use to dollarize the financial system. Because if the government came out with that themselves, then everyone would oppose it. But when Circle does it, it's like fun and interesting. So the government like passes the job onto the private sector. So I literally believe that they're just going to have, Circle's going to have this invisible hand behind them that makes sure everything they do works out.
We're live. Welcome back to another episode of Token Narratives. This is episode 101 of the Token Narratives podcast. I'm Graham Stone, joined again by Alex Richardson. We're going to get through some pretty interesting topics this week. Two big ones. One is the Clarity Act markup. We got all the analysis on that, as well as we're going to do a deep dive into Circle launching its own blockchain and native token called ARK. We will answer the question of whether that is another scam token that's going to be down only once it launches, or whether it'll actually have product market fit and be useful. All right. So before we get into that, though, let's look at a little bit of price actions and markets action. So the stock indices barely off their all-time highs. Precious metals have been kind of sideways the last couple of days, although silver is doing quite well. Bitcoin dropped below 80K again, hovering right around the 80K level right now. So on the question of how big of a bubble is the market in right now, people have been pointing out that the NASDAQ 100 is currently trading at about 15% above its 50-day moving average. And this is only the third time in the last 30 years that that's happened. The last two times were during the 2000 crisis, and the other time was the dot-com crash. So one of those couple of data points, but doesn't bode well. Things feel very bubbly in the markets. This affects Bitcoin. It remains to be seen whether first of all, markets, the TradFi markets will in fact crash, and whether Bitcoin will crash along with them, and what will happen in the remains of that. A little bit another key thing that came out this week is CPI came in hotter than expected. So we're now at a 3 years high on the consumer price index. That also has implications for markets. Consumer sentiment right now is at pretty much all-time lows. Despite the economy supposedly doing well, it's increasingly becoming this sort of K-shaped economy, and the asset holders doing well, people working in the economy not so much, and sentiment not doing well at all. Besides that, not hentai virus, but the hanta virus, rumors of that going around, seems to be kind of a nothing burger so far. But that's one of the monitoring situations. And we haven't spoken much about the conflict in Iran these days. People seem to have moved on from that. Oil currently trading above $100. It's extremely volatile, flip-flopping every day. Trump is in China now. The red carpet has been rolled out. The long-anticipated China summit happening right now. So that's another big piece of the geopolitical chessboard unfolding. And I think this will ultimately have impacts on the markets and Bitcoin. Let's get into some of what people are saying and some analysis that you've dug up here over the last couple of days, Alex.
Yeah, so Bitcoin lost the resistance or the support of 80K so far. You want to whip out the day of the wave chart here?
Yeah, I'll bring it up.
So it's basically, Dave the Wave is a great follow, by the way. Just like long-term TA, nothing fancy, pretty much only Bitcoin. And you can see here that he's suggesting that we've been in an upward channel since February with support somewhere around 71. And we may have broken out of it, but based on losing the 80K level, we might be back into this channel. So that's just sort of like a boring, non-fancy way of suggesting that we might be rallying into the summer here, as opposed to making a new low. And he's targeting the 95K level because that's sort of the last major high that we hit at the beginning of the year. Whether that acts as simply a higher or a lower high, or if it's the beginning of a breakout, I guess we'll see. But kind of looks like on the daily chart here, we're in a nice little uptrend. Benjamin Cowen, who people hate for being right about almost every market cycle in the past few years, just taking a really long-term view on things. He is still of the mind that we are targeting October 2026 for a bear market bottom, simply noting that we're pretty much right at the 200-day moving average. In the last cycle, we did go a little bit above it, but historically, this is a pretty big resistance level. And I don't know, I take what Cowen says pretty seriously. He has a great track record, and I'm still kind of leaning towards the later part of the year being the bottom, or at least the beginning of a new bull cycle. And then Glassnode came out. I really like this chart. This is the long-term holder relative unrealized loss. So you're basically looking at the unrealized losses of long-term holders per cycle. I'm not sure exactly how they're defining long-term holder right now. There's a few different cohorts for that, but you can see that past cycles have been way more stressful for long-term holders. And it does get slightly less stressful per cycle, but this metric is really suggesting that this bear market is extremely mild and extremely young, and we need to see more stress on the long-term holders before we make another uptrend. So that would be kind of the opposing view.
Unless this time is different.
Yeah, well, I hope it is, but we don't know. Ray Dalio was in the news. This was actually an older interview from March, but it resurfaced. He was talking to James Lavish from the All In podcast, and his explanation for why Bitcoin was underperforming, specifically to gold, is simply because of a lack of privacy, its high correlation with tech, and just its relatively small market size. I guess because institutions feel that it's too volatile and the price can be too easily controlled by insiders that control a lot of the supply. Of course, Michael Saylor responded to Dalio's tweet saying, "Gold is analog capital. Bitcoin is digital capital. Transparency is a feature, not a bug, making Bitcoin suitable as global collateral." I mean, Saylor's going to say that anyway, but it was an interesting little exchange.
Yeah.
How do you feel about Bitcoin right now?
Kind of wait and see right now. I'm kind of bullish on, I don't have any strategy, any MSTR, but I'm increasingly bullish on, the ecosystem. In fact, I started looking into a stablecoin version of STRC. I believe it's called APYX or something. I forget the name of it. Basically, they hold a significant percentage of STRC, and somehow it's they've got a stable coin that pays yield at about the same rate that STRC does, so 11 or 12%. This seems interesting to me because that's a decent yield. But I've also heard Michael Saylor saying a few times about how he thinks that one of the key use cases of STRC is as collateral for stablecoins. And I mean, he obviously would know that one of the biggest buyers of STRC is this stablecoin issuer, this ecosystem. So, I mean, he would say that. But I'm looking into that. I find that to be an interesting way to yield in the crypto realm without having to go into TradFi.
Yeah, it's also what are the yields on Aave and all the DeFi protocols now? It's not even worth it to plug your wallet in.
Yeah, exactly. They're like the treasury rate or less, or around there, and then you've got all the smart contract risk. So at least this is a higher yield. Now, I did run it through some of the AI models. Like I said, I haven't allocated anything to this yet, so I'm just doing my due diligence. And they're saying that 10 to 12% is not paying enough for the risk. It should be more like 17%. But I'm looking at that and thinking, oh, actually, that's not that big of a delta. Who knows how, it all depends what sources you give the machine. Something to
Yeah, the
look into.
yield kind of makes me nervous, but I guess if you get out before anything bad happens, people made a lot of money off of BitConnect.
All right, let's get into one of our first topics, our first of two big topics for today, and that is the Circle token, Circle's new token around its chain. Can you set this one up for us, Alex?
Yeah, so Circle's launching its own blockchain and a native token called ARK. Blockchain is the same name. ARK is Circle's attempt to build the quote default financial chain for stablecoin based commerce. So that would be like payments, foreign exchange, RWAs, lending, capital market settlements, probably other stuff I'm missing. And at a high level, ARK is a purpose-built blockchain for stablecoin finance rather than just like a general purpose L1. And Circle says that the idea is to solve problems that enterprises have with the existing chains, which is largely volatile gas tokens, unpredictable fees, bad liquidity, bad privacy, and other things. And in the white paper, Circle goes into what it calls the OS thesis. And it compares the state of finance today to the state of computing in the early 2000s. So before mobile operating systems, the phones worked, but all of the devices were fragmented and doing their own thing. But then when iOS and Android created a common environment, developers could build once and then reach a global user base. And I guess AWS did something similar for cloud infrastructure. Instead of every company building its own servers and tooling, they could build on shared infrastructure. So Circle argues that financial infrastructure now needs the same kind of shared operating layer. And then again, today, payments and lending, FX, settlements, these all run on like separate, slow legacy systems that don't communicate with each other. And even when they are part of one customer experience, they usually settle through different rails at different speeds with different intermediaries. So it's all just unpredictable and clunky for institutions and expensive. So Circle says that three things have changed. First, blockchains proved that money and financial contracts, they can behave like software. They can be programmable, composable, settled in seconds. And then stablecoins proved that economic value can move on those rails at scale while keeping their peg. And then lastly, regulation is starting to give institutions a clear path to participate. So in summary, ARK is Circle's attempt to become what they call the economic OS for the internet, or a public layer one purpose-built for financial activity. Deterministic settlement, privacy, and predictable stablecoin-native fees. That's a big one. Is the gas token will be USDC, so it makes it just makes everything predictable. You can think in terms of dollars and not in terms of 0.00 ETH or whatever people are doing on Ethereum. And then of course the native token is ARK. If you want to get into that,
yeah, let's get into that because we're going to get into an analysis here, I think, of what we think about this whole initiative. And much of it circles around the ARK token. So before we get into the analysis, let's just look at some of the basic facts of the ARK token. So yeah, as you mentioned, it's the native token for the chain, but it's not going to be used as gas. So while, ETH is used for gas on Ethereum and you have stable coins on there, USDC is gas, will be gas on the ARK chain once it's live. There's already a test net, but the main net, I believe, is scheduled for later this year. So, all right. So they did a $222 million pre-sale of ARK, and that puts it at a $3 billion fully diluted valuation, the FDV. And they have some pretty big name investors here. So A16 Crypto, Apollo, ARK Invest, BlackRock, Bullish, and others, even ICE, SBI, Standard Chartered Ventures. So some big names getting in on this. All right, let's see. With the $3 billion FDV, that's on a reported $10 billion initial token supply. That implies a cost of, or a price of, about 30 cents per ARK token. And that seems to line up with the reports where Circle is the report saying that Circle sold about 740 million ARK for $220 million. All right, so what else do we have? How does the token distributed? Allocations, roughly 60% ecosystem, 25% goes to Circle, and 15% set aside for long-term reserve. So we can get into what the ecosystem allocation actually means. To me, it could mean anything, but they've highlighted, things like developer grants, participants, grants for network participants, other like growth incentives. And then Circle's allocation supposedly supports development in governments, and the reserve is for longer term network stability. What is the ARK token actually used for if it's not used for gas? Well, according to the white paper, it's a coordination asset. So governance, fee mechanics, maybe staking delegation in the future, some kind of broader platform utility. And what else do we have? Fee economics. Reports are saying that network fees may be payable in multiple assets and possibly converted into ARK. So with some portion potentially being used for rewards or burns. So this could potentially make value accrue to the token, right? Which is something that we always talk about that I don't think most blockchains have. Few do. Well, like Hype is the classic example, the Hyperliquid token, where usage of the network clearly accrues value to the Hype token. So potentially there's a path for that here. We don't know the exact unlock schedules, vesting, things like that, what the validator reward details are. These are all still missing pieces. All right, let's get into our thoughts on this. I think maybe there's two ways to frame it. One, is the actual chain going to be real and useful? And then two, what about the token? Like, I feel like these are quite different topics. Anyway, Alex, you you noted in our discussion before here that you're mildly bullish on this. Could you explain why?
Yeah, I'm cautiously optimistic. I feel like if you can't be a little bit bullish on this, then I don't know what other crypto projects that you could be optimistic about. So I'm personally moderately bullish on ARK for a few reasons.
What if you got pages for exploring crypto? Read news, check prices, discover new projects, and stack rewards along the way. Over $1 million in rewards paid out so far, and we're just getting started. Download the Bitcoin.com wallet today. The wallet that pays you.
First, I think it's pretty clear that Circle is like the Wall Street / Washington / banking dynasty goblin approved CBDC company that the US is going to use to dollarize the financial system. Because if the government came out with that themselves, then everyone would oppose it. But when Circle does it, it's like fun and interesting. So the government passes the job onto the private sector. So I literally believe that they're just going to have, Circle's going to have this invisible hand behind them that makes sure everything they do works out. Kind of speculative, but I believe that. Secondly, Circle's a big, well-connected company. It's not like this is some anonymous group of ragtag developers. It's a public US company backed by BlackRock, ICE, the company that owns the New York Stock Exchange, Standard Chartered. I think it's reasonable to assume that all these guys did their due diligence and they have a great chance at not fumbling the bag here. Third, the ARK token sounds kind of good to me. I mean, the bar is very low, obviously, but I think it's been generally decided by the markets and everyone now that in order for a token to not be useless and trend to zero like all the rest, it has to be able to, like you said, capture some kind of underlying economic activity, the same way that an equity does. The classic example is Uniswap. Uniswap is arguably the best innovation in DeFi ever, the AMM. It was like massive success, trillions of dollars in volume, and yet Uni is a pretty stupid and useless token. It just doesn't capture any of that value, and you can make the same arguments for maybe Chainlink or Aave and others. Doesn't mean that they can't be useful in the future, but after many years, they're useless. But Circle, I think, is at least thought about this a little. So like holders and stakers and institutions that integrate into their stack, and it's a big stack. They all get various like discounts and benefits for holding ARK. There's a burn function which converts the USDC fees into ARK and then burns it. And the white paper explicitly says that, where is it? Quote, the objective is inflation neutrality, a state where burn from network activity fully offsets new issuance. So I think they're at least trying to make the token not useless, which already gives them a head start on most other tokens. They're probably going to have a lot of revenue. Go ahead.
Hey, can I just interrupt you?
Yeah.
You're getting me, this sounds pretty good, but I wonder, and like I get that, there's many projects have made mistakes before them. You would think that Circle has learned from this and they've designed this ecosystem to actually have the value accrue to the token. Why not? Why didn't Tempo do this? For example, Stripe and Paradigm's chain. They raised something like $500 million at a $5 billion valuation in October. But they didn't need a token at all. Like it just seems like what's the point of having a token? Does it actually help the network?
Well, to a certain extent, I guess no one needs a token. It is to an extent a money grab or a way to finance themselves. But I don't know if Stripe has the moat and the stack that Circle does. Like Stripe doesn't have the biggest US regulated stablecoin in the world. So I think Circle has a foundation to actually make this work. Whereas, like Base didn't create their own token either, but and maybe they could actually in the future, but they just don't. They don't have the foundation and the stack and the moat and the integration of everything to actually make it work. If anyone is going to do it, I feel like it's got to be Circle, if that makes sense. Maybe I'm just trying to justify the money grab. I don't know. But to me, it actually makes sense for them to launch a token.
All right. Well, any other points in why you're cautiously bullish?
Yeah, well,
Speech.
Okay, so the other things is, so the testnet is not a ghost town. It was reported that the ARK testnet, which came out in October, it processed over 244 million transactions with basically perfect uptime. I think that USDC as gas is an interesting design choice, and that's going to be big for institutions because everyone wants to think in terms of dollars. I also just think that 3 billion FTV at launch sounds pretty good. Like that would put it well below Avalanche and Shiba Inu. Like in 2021, Cardano went to 90 something billion with virtually nothing happening on it. So to me, it sounds pretty good. Now, you could argue that the fact that Circle is already public at I think it's $30 billion market cap, that could dilute it a little bit. So I would say like ARK is sort of a call option on Circle's blockchain becoming useful and having lots of activity on it in the future. All
right. So let's get into maybe the big picture there. Will this blockchain actually be useful and used? And it's if I'm gathering correctly, you're saying it will be because they've got all these partners. They're the ordained one in the US ecosystem. They're going to get the support of the admin. But the reality is that no stable coins are like run on the network yet. The network effect is on Ethereum, Tron, Solana, the big public blockchains that people have been using stable coins on for years, close to a decade at this point.
Yeah, that is the main risk, is that none of this actually exists yet, and they have to build all this from scratch with competitors.
And then there's also what would you call it? The commoditization risk of the underlying business. So we're in our next topic, we're going to be talking about more legislation, as Congress advances stablecoin legislation. Banks, fintechs, payment firms, they're going to be issuing their own digital dollars. Why would JPM coin or PayPal US dollar, why would they use Circle's infrastructure? I mean, they wouldn't. They would just use either their own or a public, like a credibly neutral platform. So there's that risk.
I guess it would come down to liquidity. I think it'll be easier for ARK and all of its distribution moat and all of its partners to create decent liquidity. I mean, if you're JPM, do you want to create your own and try to create your own liquidity, or do you want to tap into a fully regulated, ordained chain that already exists and works and is been audited and everything?
Yeah. All right. I think I've been a bit converted here, Alex, from extreme skeptic, I would say, because here we go, another corpo chain, another money grab, token launch, $240 million, bunch of big VC firms getting in on it. They're all going to just dump on retail. That still may happen. Well, it remains to be seen how that plays out over the next year or two, but I think they've got a shot. So cautiously, I guess you've converted me to cautiously optimistic as well.
Yeah, I just think that they're not going to screw this up. Like they're going to make sure it works, because it's just a very sophisticated company with a sophisticated group of investors and backers. And I just think that dollar milkshake theory is real. Stablecoins are how it happens, and USDC and Circle are the clear leader in the US as far as regulated entities to provide those stablecoins and financialize the world on chain.
Yeah, there's a big tailwind.
They haven't. Yes, exactly. If anyone else
the entire market is going to get much
doing
bigger.
this, yeah, they're also like, I think we talked about this last week, but the growth trajectory of RWAs is insane, and it's still so small. And I think that's one of the main focuses on the ARK chain. I feel like they're not coming late to the game. They're still really early, and they're the best player. So they have a chance to really get in on the first floor when it comes to RWAs and tokenization. And that could be, I think that'll be like the main driver of the chain, if anything.
All right. Okay. Well, I, for one, will be watching the launch of this token closely and the chain itself. And I'm sure we'll be covering it more on Token Narratives and the weekly. So
yeah,
let's get into our second
in a year and see if we look like schizos.
I'm sure we'll be talking about it before a year from now. All right, so let's talk about our second big topic for the week, the Clarity Act markup. So a few hours after this podcast finishes, the Senate Banking Committee is going to be holding a markup for the Clarity Act. Now, this is the first ever committee vote on a comprehensive U.S. crypto market structure bill. Bit of background, what Clarity actually does. It's a 309-page bill. I'm sure everyone here has read it all from cover to cover. And it defines which digital assets are securities. So those ones would be under the SEC jurisdiction. And which are commodities. Those are under CFTC jurisdiction. And it establishes rules for exchanges, stablecoins, custody, and developer protections. Some of these are still quite controversial. Now, the House passed it in July of last year, getting close to a year already from now, ago. They passed it with a wide majority, 294 to 134. Now it's the Senate's turn. What this markup is, a markup is where you've got this committee. It's like a subgroup of senators. I think they're like 29 or something. And it's like their editing and approval session. So they debate the text, they vote on proposed amendments, and they then decide whether to report the bill out of the committee to the full Senate floor. Now, there have been something like 130 amendments that have been filed. I think they have to actually like address each one of them. So the markup might actually take several days, but the amendments in practice are rarely approved at markup. They're mostly, from what I gather, more about just like forcing on the record votes, kind of political theater. But yeah, I mean, speaking of political theater, Elizabeth Warren, what did you call her? Cat lady?
Psychotic cat lady.
Psychotic cat lady. She filed 44 amendments, including one blocking the Fed from issuing master accounts, specifically blocking the issuing of mastering accounts to crypto firms. So I got a quote here from the psychotic cat lady herself. She says, "The bill puts investors, our national security, and our entire financial system at risk, and it will turbocharge Donald Trump's crypto corruption. In just 1 year in office, the president and his family have raked in at least $1.4 billion in gains from crypto deals alone, and yet this bill stunningly includes zero provisions to prevent that. The ethics component of this bill might actually be the biggest sticking point once it gets to the Senate floor, from what I understand. But just a funny, sarcastic aside as a comment from Elizabeth Warren's take on the bill. We have a note here a quote here from Patrick Witt. Now, Patrick Witt, I believe, is the guy who's kind of taken over from David Sachs as the crypto czar. He's like, there's no crypto czar now, but he's the executive director of the President's Council of Advisors for Digital Assets. So I think, as I understand it, he's like the new top crypto advisor, I guess. Anyway, so he says sarcastically, "I'm so impressed that Elizabeth Warren stayed up all night to read the 300 plus pages of the Clarity Act and deliver an objective assessment of the bill's merits and not just some knee-jerk reaction. This is what true public service looks like." Now,
that's literally what she does. She's just like perpetually offended at literally everything. She reminds me of like some woman that lives in your apartment building who's just like leaving notes on your door, being mad at everything, like mad that the walls aren't painted, but then when you paint them, they're the wrong color, and just mad at everything.
Well, she's done well for herself. She's a good politician, for what it's worth.
Yeah, I mean, I guess that's what they do, is they just get offended.
Yeah. Now, I think despite the Elizabeth Warren posturing, the real fight is not coming from her. I believe it's more the banks. So on May 9th, Sunday, the three largest U.S. banking trade groups, ABA, BPI, ICBA, those are the acronyms for them, they formally rejected the so-called Tillis Alsobrooks stablecoin yield compromise that the industry had backed, Coinbase, Circle, and others had backed. The CEO of one of these trade groups sent an emergency letter to bank executives on Sunday night, urging them to call their senators. And they're panicking because 80% of their lending they fund 80% of their lending through customer deposits. So if stablecoins can pay activity-based rewards, then deposits will leak out of the regional banks, and this could be existential for the banks. So they're against the compromise. They'll be pushing for an amendment to be included here that removes that compromise, removes the loophole, the so-called loophole, to enable some form of rewards or yield on stablecoins. So I think as this thing goes through the markup, it'll be interesting to see how that amendment is voted on. I think that'll be a key thing to watch here.
Yeah, there's obviously a lot of controversy, but I think it's generally being perceived as net positive and bullish. Even if it's not like 100% ideal clarity, it's still clarity, and it's going to remove a lot of barriers for institutions and other large entities to enter the space. I think there's also like a huge geopolitical advantage for the US to get ahead, just since the digital asset ecosystem is priced in dollars and the growth trajectory is quite favorable. For example, Brian Armstrong from Coinbase, he said the bill is strong. It'll benefit the American people by making the U.S. financial system faster, cheaper, more accessible. It's also going to ensure that the U.S. leads in the global race to build the next generation of our financial system. Kind of PR-y, but it's true. I think Michael Saylor said last night's Clarity markup would unlock the next wave of digital capital, digital credit, digital equity in the U.S. David Sachs is optimistic about it. There is like some dissent. So Aaron Day, friend of the pod, he said that the Clarity Act is actually the biggest surveillance bill in U.S. history, and people are getting rugged on the wording that on the surface appears to protect devs. It doesn't. Free the prisoners and fire Lutnick, kill Clarity. Make of that what you will. I don't really know what he's backing that on. I'm not saying it's not true. I think digital assets are already kind of a surveillance system, but
I mean, for what it's worth, the DeFi Education Fund, which is a major sort of advocacy group, I guess, they say the current text does have the protections developers need, but they're watching amendments closely. And speaking of amendments, I believe there was one from the Fraternal Order of Police, and it's opposing the developer protections, claiming they'd, quote, limit the ability of prosecutors to pursue cases of financial crimes. So there's at least one group of people out there are trying to sneak in an amendment that would remove the so-called developer protections.
Yeah, this is
Charles
section
Hosk-
604.
Yeah. It's just 604. Charles Hoskinson, also friend of the pod, says he's been quite vocal about this. He says, you develop open software, give it to the world. Someone does something with it without your consent and you're forever liable. It's a dystopian nightmare. So if they don't include the developer protections, then that's the situation we could end up with, at least according to Charles Hoskin. Also, Austin Campbell says, Chopping Block, I believe, or no, some pretty big, decent podcast. He's also a professor, and he's also worked on actual criminal seizures in the past. And he says, these are people who want the right to make anyone who uses or makes a web browser a criminal for political purposes. So he's framing the opposition to the so-called developer protections 760-604 as being politically motivated.
Yeah, that's a big one, because if you think software is speech, then you could frame it as a violation of freedom of speech, and it's going to allow authorities to arrest anyone for simply creating software. This has obviously already been a big problem with Roman Storm from Tornado Cash and the Samurai developers. Like they're removing these protections would allow them to just arrest anyone that creates software, have a criminal that happens to use it.
Yeah, that's dystopian.
Yeah.
All right. So what's going to happen with this markup? From what I gather, it seems likely that it'll clear the committee either today or tomorrow, depending on how long it takes them to get through the amendments. The industry, besides the bankers, I guess, are quite aligned, and it seems like things are moving. The last GOP holdout, Kennedy, said he'll vote yes on this, but getting through this stage is not the end, right? You still have to reconcile it with another version, the Senate Agriculture Committee's version. It's got to get through the Senate, and to do that, there's probably going to be some kind of ethics standoff. They're going to try to tie some crypto ethics stuff in here, and in order to get some Democrats on board. And the danger there is that if there's anything too direct against Trump, he's just going to veto the bill and kill it. And, if it doesn't make it soon, then it's probably not going to happen could be years. Right now, Polymarket has the odds of this passing in 2026 at around 60%. It was 75% not too many days ago, down to 60%. Galaxy has it at 50%. So it's quite a pivotal moment here for, I think, crypto regulation in the US and therefore the world.
Yeah, I think Senator Tim Scott wants it done before May 21st, and the White House wants it by July 4th. So yeah, if it doesn't happen this year, then I don't know. It looks like it'll be dead for a while. But I think it can't come at a better time, because this is either the beginning of a breakout, a beginning of a bull market, or we're probably in the last leg of the bear market, and that's when news like this actually helps. If they came out with this at the top or right after the top, then it wouldn't have an effect. But I think the timing is perfect, so that it acts as a nice bullish tailwind for the industry.
Yeah. So for the sake of our bags, let's get this thing passed. And let's wrap it up there, Alex. Thanks for your insights. Thanks for everyone for listening. That's it for another episode of Token Narratives. Catch us next week for our weekly news roundup, The Weekly. And be sure to follow us on all our channels. We're constantly pumping out high-quality interviews with the industry movers and shakers. So keep an eye out for all of those. That's it for us. Have a great week.